So we're currently running in these beautiful GU shorts that we've got going on this Monday morning. This is my first trade this week, and we're currently floating $1,200 in profit. You're not going to be able to see that, so I'm going to pop this right above my head. And as you can see, we got an absolutely beautiful entry, and we're currently running, what is this, 1 to 1.2. And we're targeting the lows right here to give us a nice 1 to 3.5 risk to reward. So overall, this looks like a great trade. So let me break down exactly why I've ended up inside of these shorts on a GU. So first and foremost, we come up to the higher time frames, and if you're part of the VIP group, I would have sent you the weekly outlook yesterday, and you know exactly why we're in this shorts. But overall, the market is bearish. We're creating a series of lower lows and lower highs. We've got the previous day high right there, and what happened this morning? Price swept the previous day high, tapped into an hourly area of interest, and then we come down and we go to the 1 minute time frame, and we've had this nice change of character, market structure shift, giving us an inverse inefficiency, which is why we ended up taking this trade right here with 10 points as our stop loss, and we're targeting a 1 to 3.5. So super easy and simple trade. However, the one thing that I do have to note is that the 15-minute time frame is relatively bullish, right? This was caused by NFP. It was a catalyst pushing price to the upside. Now, once we got this push to the upside, price has no longer come back down to retrace. It has continued with its bullish momentum. However, the overall direction of the market is bearish. So intraday, we are bullish. But overall, we are bearish, which is the entire premise behind this trade. So we have to kind of take this trade with the understanding that this move might not sustain. There might be a case where, yes, we've had this pullback, but if we literally just look at it, what's going on the 15-minute right here, we can literally see that the 15-minute is also very bullish. Higher high, higher low, higher high. So this pullback could very well just simply be a pullback into a higher low, and then we continue higher from there. That is why I've already gone break even, so my risk is completely off of the table, and that means if we do sweep this high, then I can look for another re-entry somewhere higher up here to take a nice and simple trade. Now, as you guys know, if you watch this channel, you've been watching me trade over the past 2 years, you know that I love to trade the Asian session range, and you guys can see that not only did we take out the previous day high, tap into a higher time frame area of interest, but we also swept the Asia high. So I've confluent stacked all the way up to the max. GU is just absolutely blasting, so I love that. And I do want to see a trade on gold as well, because we've swept the previous week and the previous day's high. We've also swept this liquidity, and we are very rapidly approaching, what is this? We're approaching rapidly a daily fair value gap, right? So that could give us a very good excuse to short gold and potentially take price down to this daily fair value gap, which we've left, which I believe is a 4-hourly, and then you can cycle it all the way down and you get the gist of what I'm trying to say. So that looks really, really good. Let me put an alert there. If we enter into there, I'll be looking for a short. The only thing about a counter trend trade that you have to realize is that there will be multiple areas of interest that will potentially be the sticking point where price can reverse from. So if we take a look at what's been going on in this leg of price, well, immediately we can see that we've got a bullish fair value gap right there, which price tapped into, had some form of a reaction, but then we tapped into this bearish fair value gap, and then we kind of dropped from there. So then we disrespected this bullish fair value gap, meaning that the bears are still in control. Just below it, we've got another bullish fair value gap, and as you can see, price has tapped into it, created this really nice doji candle, and now if we get a full body closure like this, a big body green candle to the upside, that will kind of indicate that this fair value gap has given us enough sticking power for price to continue its momentum to the upside. Now, what is a fair value gap? If you guys don't know, a fair value gap is simply just an inefficiency in the market, meaning that within this leg of price, within this 3-candle range, right here where you can see this gap, there was only buys offered. There was no sells offered. And as we know, price likes to be in equilibrium. Therefore, if price is not in equilibrium, it will be magnetized to that area, meaning it will come back to close out, bring efficiency back into the market, and then continue from there, which is why we utilize fair value gaps within our day-to-day trading. However, that can be good in a pro-trend market. However, when we're looking for reversals, what we want to see is price to come and tap into a bullish area like this and give us an indication that it wants to reject away from it. Similarly to what happened just above right here, where price bounced, had a reaction, but then immediately we were greeted with this massive bearish move to the downside, which told us the bears are still in control. There's a lot of volume and a lot of momentum right here. And we can literally just continue with that same thought process, with that same terminology. And if we take a look at this right here, we can see that we've created a bearish fair value gap. Now, this bearish fair value gap was created after price tapped into a bullish fair value gap. So you kind of see where I'm going with this, right? Price is always going to be bouncing from areas of interest to areas of interest. It's always going to be seeking liquidity and finding areas of inefficiency. So what happened? Price pushed up, came down to close out this bullish fair value gap. It closed it out, brought price back to equilibrium. Pushed up, realized the bears are still in control. We then disrespected this bullish fair value gap. What happened then? On our way to disrespecting this bullish fair value gap, we created a bearish fair value gap, telling us that there was only sells offered during this momentous push to the downside and no buys. Therefore, the bears are now in control. We then came and tapped into this bullish fair value gap, where price then had a reaction, pulled back, just missed this bearish fair value gap, and now we're sort of reacting to the downside. So my anticipation is that we're probably going to come back up to close this bearish fair value gap and then continue lower to go and seek this liquidity. Now, if you guys can understand the footprint that price leaves behind and you're able to read the chart like this, there is no need for you to panic if price starts to pull back, right? Because if price pulls all the way back up to here, we can see that there is a fair value gap right there. So what I've done is I've put my stop loss on my break even just above it, meaning that price can very well pull back all the way up here into this bearish fair value gap, which we've just left, right? We can come all the way back up there, tap into it, and then drop from there. It doesn't necessarily just have to tap into this and then continue lower, because there is still this inefficiency that needs to be brought back to equilibrium. That if this fair value gap does not hold, that means this trend is no longer going to hold. That means we're probably going to use this fair value gap as the catalyst to go and put in a brand new higher high. So with that understanding, you just have to know where you need to put your placement for your stop loss, your take profit, all of that good stuff, because they are equally as important as your entry. You need to know where to enter, where to exit, and where to take profit. Once you know all of that, there is no way that you can be an unprofitable trader, because you literally know what you're doing. You understand the market. But having said that though, just remember that the market is a statistical game. You can do everything correct and still end up with a loss. And it happens time and time again. There are trades that will play out every single day, right, that I will take. And it will be an A+ setup. It will meet all of my confluences. And what will happen? I will take a loss. And what do I say to myself? It's just a statistical game. Losses are part of the game. You can do everything right and still lose. It doesn't matter. What matters is your ability to show up every single day without failure, without cracking, without jumping to another strategy. As long as you can just stick to your strategy and show up every day and execute, you're going to be a profitable trader. As you guys can see, we were taken out at break even. Unfortunately, price reversed on us. Luckily, we had our stops at break even, because otherwise this trade would have been a stop loss. So price was battling with deciding who was in control. We had this bullish fair value gap, which gave us a reaction. Price then absolutely blasted straight through it. Came to this fair value gap where we actually blasted straight up from. So like I was saying earlier on, in a counter trend scenario, you always want to make sure that your risk is off of the table, because your counter trend trade is less likely to sustain, then with these bullish areas of inefficiency, that are probably going to be the catalyst for price continuing in the pro trend direction. That's exactly what happened here. This fair value gap gave us enough juice to push higher. We then came back down, closed out this inefficiency, and then it literally just blasted straight up from there. Now, I didn't end up catching any re-entries because after we had this big push down, the risk to reward on this trade just became very bad, right? And on top of that, we have this massive fair value gap after this market structure shift. But this fair value gap is so big that I just did not want to take that trade. As you can see, since then, price has literally just been consolidating anyway. So good thing I didn't take that trade. So overall, it's a break-even day. However, I am in these sells on gold, and it's following a very similar sort of outlook. So we tapped into this daily fair value gap, and then from there we've had not only a market structure shift but a confirmation as well, which means we've confluence stacked all the way again, giving us a solid trade. So following all of the criteria that I need for a good trade have been met on this occasion. Therefore, I executed a position right here on this fair value gap. We chopped around for a while, went into a little bit of drawdown, and now we're back in the green. It's a new day and we're still in this gold trade. Now, overnight, as you guys can see, if I left my stop loss right here, I would have been clipped out. However, what I did do is I moved my stop loss just above this high because that is our protected high. If we went above that, it would have invalidated the entire trend. And that actually kept me into this trade altogether because we clipped this weak high, but we stayed below this protected high. So we're still floating nicely in profits at the moment. Let me check what we're up right now. So we are $1,600 floating in the green, and that is a take profit on gold. As we can see, that is $1,900 banked. I don't know if you guys are going to be able to see that. I'll put a screenshot of it right above my head. So we took a 1% loss on GU yesterday, which resulted in this big spike to the upside, and then price obviously came down and took our take profit as well. So this was just unfortunate that we had this move to the upside. If we didn't have that, this would have been a nice 1 to 3.5 risk to reward as well. But luckily, gold came in to save the day, and we took a nice 1 to 2 risk to reward. Made back our 1% loss on GU plus an additional percent. So that was really good. And apart from that, I think that is pretty much going to wrap it up for this video. If you guys did enjoy it, then don't forget to leave a like, comment, and subscribe. But on that note, I'll catch you guys in the next video.